9 is the name of the game. So what do we have? A 50-day simple moving average. It's testing the 50-day as we see it on the S&P 500, and we can see the top and the pullback. Now, let me just tell everybody something. Ever since we called the bull rally here and tested that 50-day double bottom breakout, it tested the 50, only undercut it, not even hardly anything. Right here on the 50, breaks it out to an all-time high. Guess what? This pullback here right now is a 50-day moving average now that's testing it. We don't know that it undercuts it to the 100 yet or not. So far, that has not happened. So, even with the beginning of this particular index, we do have earnings season. The volatility is going to increase over the next 3 weeks, big time. And when I mean big time, I mean big time. We could break below it. It has not done it all year. So, even if it slightly goes below it, it recovers usually the next day or the day after, no matter what. And it's always been a good trade to go long. Okay, this is where the breakout happened, is where he's testing it right there. That is where the breakout right here happened, narrow range. Gapped it up every day, gaps it down a little bit, pulls it back up to the top. Down it comes. We call that top. Still a 4-day negative tape with that doji right there and a gap down below it to prove it. The S&P has entered into a sell signal as it did over here. But it came out of the sell signal after 4 days and rallied to new highs. So basically, now that we do have that sell signal, that is minus 8.3. So when we had the sell signal right here that day, it was minus only 6.1. That means that this sell signal is greater in common denominator value as we see it, 8.3 negative. That means that when we gap to resistance, the S&P will have its resistance. The volatility will get into the S&P. We got the earnings. We would like to see a drop below the 50 so that things could get more in trend channel where bigger breakouts to the upside gives us bigger returns and bigger opportunities is what we would like to see. But listen, right now we will have that volatility. It was a big day. It was down 68 points. Oh, yeah, it was. Or 1.58%. Yes, it was. It hit a low of 42.33. The high was 42.96. Yes, that's going in the wrong direction. But we got the test. Buyers moved in. We will get a gap in the morning. I'm just going to caution, though, even though that this is a great opportunity, sometimes it could be that one time where that opportunity does not work. So we have to look at both sides of the picture in total clarity. And that's what we're doing here, doing it now, and the way that it needs to be done. And if we gap into resistance and it becomes negative volume, you gap in volatility to sell the volatility. Okay? So this bull run started when we called it here. And we have ran to the top of the channel with the 4 negative day pullback, and it's only healthy for the market. But upside volatility in this S&P can gap right back to the neckline reversal, which would be back up here at 43.65. And that's exactly what volatility does. You go down big in the beginning of a correction, and then you gap up in volatility, and then they make new lower lows over the next couple of weeks. And that's how this is going to play out with volatility.